Hey, it's Drew, and today we're going to talk about the importance of coming correct with your credit score when it comes to buying a house. So, what is credit? It's murky, it's personal, it's weird, and it's kind of a racket. But unfortunately, it's a game that we need to play if we're going to qualify for a loan. And not just that, if we're going to if we're going to get in the tier that gives us the best interest rate. So, quick story about me. I actually did not have very good credit when I first set out to buy my first house. And what I did was I used a credit repair service and it upped my score from around 640 to a 700. Now, this isn't because I made a bunch of bad choices and didn't pay people back. It's because I had a lack of credit and I just didn't know when I was younger that I needed to start building and have credit cards. Now, the banks, they need to know that you are worthy of the hundreds of thousands of dollars that they're fixing to give you to buy a house. So this is important. Now, what are the factors that go into your credit score? So payment history, have you been making your payments on time? Public records, do you have any outstanding liens, bankruptcies, or judgments against you? Length of history, how long have you had credit? New accounts, are you opening new accounts? I've had clients open Best Buy credit cards while they're about to close on a house and it's throwing things off. Not a good time. Number of accounts, how many outstanding lines of credit do you have? Can we clean some of those up potentially? And recent inquiries, have a lot of companies been looking into your credit worthiness? Now, for conventional loans, they want you to have at least a 620 credit score. That's going to get you an interest rate, but it's going to be higher than the ones that you see advertised. Interest rates are really good right now, so now is a good time to try to get the lowest one possible. Now, if you are between a 580 and the conventional required 620, you can get an FHA loan, which is backed by the government. However, there are some hurdles that come associated with that, such as a more intense appraisal process when you buy and having to pay private mortgage insurance on a 3.5% down payment. Now, other options are use a credit repair company, get a portfolio loan, which is higher interest rates and potentially more costly over the long term, and get a co-signer like your parents. Texas Best Credit Repair is a company I use. They helped me a lot in about 7 or 8 months. It only costs between $600 and $1,000 depending on your situation. Now, if you want someone who's going to be a little more turbocharged, we like the Phoenix Group. They're out of Dallas, Texas. They actually have lawyers on staff who put more personal touch on this, but they are going to cost you a little more, between maybe $1,500 and $2,000. But this is an investment with an ROI. You're going to be paying less over the long run when you have a lower interest rate, not for just your house, but for anything else you want to get a loan on. And finally, if you have any questions, give us a shout, or if we don't know the answer, we'll forward you to someone who does know. All right, y'all, so hopefully that helped you understand the importance of coming correct with your credit when you're buying a house, and give us a shout if you have any questions.